What's up, guys? QA here, and today got a special guest for you. Mark Argianis, CPA extraordinaire, also happens to be one of my best friends since I was 3 years old. So, Mark, thank you for being here today to take on some of these questions, bud.
Yeah, thanks for having me.
Why don't you just tell everyone a little bit about who you are, what you do, and then we'll get into the crypto related tax stuff.
Sure. Yeah. So I'm a certified public accountant, have been for the last 6 years. Been doing tax work for the last 10. Been an accountant for 12 now. So started in private accounting, worked my way to public accounting. My family's been doing accounting for about 40 years now. I recently purchased the practice, so I'm kind of stuck with it.
You're the big dog now, baby. Everything runs through Mark over at Argianis CPA, huh?
That's right. Yeah. So it's all on me now.
Awesome. Well, let's get into just talk a little bit about like what crypto related questions do you have come up a lot? What are some things you think that everybody watching this needs to pay attention to, specifically with it being the beginning of tax season?
The disparity kind of questions that come with crypto digital currency is how do you record it. A lot of people
Mhm.
assume it's handled the same way as stock, which unfortunately that's not the case. It's handled as real property, as if you were selling a tractor, for instance. So it's not when you sell it for cash, it's anytime you make a sale, a trade, or use it to purchase anything that triggers a taxable event. You trade it for one coin for another one, that's a taxable event. You sell it for cash, taxable event. The only kind of caveat to that is if you transfer wallet to wallet, that's not considered
Okay.
a taxable event. So the big thing that we see is just cost basis. Tracking your cost base is kind of the biggest thing, especially if you're going to use a tax professional to prepare your taxes. They're going to ask you for that. So that is kind of the one thing that gets lost in translation a lot.
And so the cost basis and everything like that, if you're through a major exchange, I feel like for the most part, they're taking care of that for you, right? Like when I've sent you Coinbase and Kraken, that's all pretty easy for you to figure out.
Absolutely. Yes, they do a very good job. The thing is with the IRS, these regulations now, they haven't required that from a lot of brokerage and exchanges, but starting in 2026, that will be required.
Okay.
So
So
a
for
lot of the
next
time,
year's,
exactly. 2025, they'll start issuing you 1099 DAs for digital assets, but it's not required for them to put the cost basis on there. Starting for 26, it will. So it will
okay.
be much more uniform going forward.
So a highlight out of something else I just took from what you said is I feel like there's a common misconception around people switching out assets for other assets where it's like, hey, I sold my XRP into BTC. That's not a taxable trade. Well, yes, it is what we're saying here. So especially like guys, if you're using decentralized exchanges, some of these different dexes that aren't going to be recording your cost basis and stuff, like you have to be paying attention to that, to Mark's point, especially moving forward after this next year here. So you got to make sure you're keeping your books clean if you want to stay out of trouble here with the tax man.
Absolutely right, and that's when you kind of you're if you're not on it right away, it can get real messy real quick for you.
Yeah.
Um, and kind of the other thing, kind of off your point, the IRS accepts two methods of cost basis. They're either going with FIFO or specific identification now. So if you're using kind of LIFO or HIFO to your advantage, just be careful if you were to be audited because the IRS is only going to accept FIFO or specific identification now.
So can you just explain real quick FIFO, LIFO for those people that might not understand it?
Yeah, absolutely. So FIFO being first in, first out. So the first coin you purchase, that's the one that you would just be selling. And brokerages, that is their default.
Okay.
They're going to stick with that unless you tell them I want to use specific identification, and that is supposed to take place prior to the sale or
Okay, so
transaction.
let me just explain that in terms that, is easy to make them understand. So we'll just keep XRP. Say you buy XRP January 5th, you buy 100 of them. You then buy 100 XRP January 16th. When you go to sell that first 100 XRP, it's pulling it from your January 5th purchase date. That's your first in, first out. So that's how that type of accounting, that's how that works, essentially.
Exactly right. And that's what it's going to default to unless, specified otherwise.
Okay. And then you mentioned outside of FIFO, what was the other thing that you mentioned? The other type of cost basis or whatever it was?
Yeah, specific identification. So
Specific
unless
identification.
you tell them this XRP, for instance, I purchased on this date is the one I want to sell, it will default to that January 5th instead of that January 16th
And
transaction.
so as of right now, we have that power to decide as of 2025's tax year. Are you saying in 2026, is that something that also changes or no? That's still okay.
That's still okay. You still can, you do either of the two.
Okay. And so,
Just
guys,
the
why that's
default method would be FIFO.
sure. So that individual identifying method, guys, why that would be important is you can then keep a portion of your bags into long-term capital gains if you want to and sell some of your more recent purchases. So if you do specify that, you'll be paying higher taxes initially upfront, but you can give the stuff you bought initially, if you're not selling everything, a longer amount of time to mature. So then once you hit that year mark, you can take shorter term, longer term capital gains tax on that.
Right. And the longer term capital gains is almost always more favorable
Right.
in your situations.
Okay, cool. Thank you. That was very helpful stuff there. I think a lot of people are going to learn from that. What else you got for us?
Another thing that gets asked a lot is about crypto mining and how that is handled differently than just sales or trades.
Yeah, that's a whole different world.
Mhm. So the crypto mining is actually taxed as ordinary income. It is not taxed as if you are trading it or selling it as capital gains. You will pay it at your ordinary tax rate. Um, and so whatever the fair market value is, what you mined it at, that is what you will pay tax on. However, once you then sell it, you would just only pay tax on that gain from, when you mined it to when you sold it or traded it.
Got it. Okay. So it's treated more as income. So if you're getting taxed people at 28% for your annual income or whatever it is, through your job, your W-2, that's also the effective tax rate if you're mining crypto is what we're saying, right?
Correct. You would be paying tax on that, whatever your ordinary income tax rate is with all your income
Right.
added. Yes.
And then that's federal, but I'm assuming that also still applies to every state tax as well.
Yes, correct.
Okay.
So in Illinois, where we are, it's 4.95%. But yes, each state has a different tax rate, and that would also be taxed.
Okay. And then are you able to, from your position, you're able to do all 50 states, correct?
That is correct. Yes.
Okay. There's
Anywhere
not special
in
licensing for certain states or anything.
there's not. No.
Okay. That's what I figured. Cool. So that we covered cost basis. That's super important. Again, guys, strategy around that, knowing which coins to sell when. Um, it's great to have someone, for me at least, great to have someone like Mark, a professional that's able to tell me like, hey, if we want to minimize taxes on this, here's how we should play this strategy. So I had a question from my group though, Mark. For someone who wants to handle taxes correctly long term, what would you recommend for a service that manages all crypto tax related tasks and ensures that everything is filed properly?
For sure. So a lot of our clients will send spreadsheets, which I do not recommend them tracking them. Some use Coin Tracker, which is what I've seen a lot.
Coin
Um,
tracker. Yep.
You can input all your activity there, and then they'll give you a document annually that you can provide to your tax preparer or myself. You give to them, and they add that right to your tax return. It has all of your taxable events on there. Then you meet with your preparer; they can explain that to you. This is your short term. This is your long term. This is how we got here. It just makes it nice and concise. It'll save you and what you have to pay your preparer. The quicker it is, usually your preparer is going to charge you less. So that's a
Right.
win-win for everyone.
Yep. Yeah, it definitely seems like it's worth it because if I'm understanding it correctly, you're popping in your buys and sells and just that information that you can, even the dexes have a lot of that information available on like a spreadsheet or something. You just copy paste it, spits it out for you. And then so it sounds like for managing it and figuring out, like we said, your cost basis and everything, that's the way to go. But when you're actually looking to file, that's when you would really kind of want to bring a professional in, right?
Absolutely. Yeah, this will get you to the first half of it, but then I would definitely recommend using a professional because this can get really complicated really quickly. Because it can be a lot of tangled webs, really.
Yeah.
You trade one coin to another. That's one thing we have to keep track of, and then another, and then when you sell it, and then if you're also changing wallets often, or using a decentralized
Exchange.
exchange,
Yeah.
yeah, that's when it can, keeping track of all that is just an added headache for you.
Well, and I remember back when I was doing this, and you've been my accountant my whole life, but back when I was doing this in 2017, 2018, like the major exchanges didn't give you anything. And trying to figure out what I owed on taxes was just an absolute nightmare. So the fact that this software exists now should be making our jobs easier, and hopefully it should be making your job easier a little bit too, right?
Yeah, and one other thing, the IRS is evolving and getting, more up to the times with all this. So it's
Yeah.
better to start now, while it is still in a little bit of a gray area to get your ducks in a row before, they start really looking into it.
Yeah, exactly. And anytime the IRS comes knocking, like especially if you guys have made some big gains at some point, like, and maybe it's a little dicier, like if you don't think there's a chance they come knocking back on your door a couple years later, you are dead wrong. Because I mean, how many times have we seen that even just with people we know that are dealing with
Yes.
tax issues from 2020, right?
I mean, yes, and the IRS has 3 open years to come back and look at your returns. So, and then if they find something, they can go back another 3 years. So we tell people to keep 7 years of records,
Yeah.
and just it's better to cover yourself than not.
Yeah, 100%. It's just not, none of this is worth going to jail over. Take your gains. If you're paying taxes, it means you made money,
It's a
right?
good thing.
That's a good thing. Paying tax, I mean, are taxes too high? That's a whole different conversation.
Yes.
But paying taxes means you're making money. So don't skimp on that. And guys, I will tell you again, Mark has been my best friend for almost 30 years. I trust this man with my life. All of my taxes, all of my friends' taxes. I'm going to drop his information in a tweet, somewhere where you guys can find it. You can schedule. How does it work, Mark? Can they just schedule a call with you? Like, what's the
Yeah.
preferred?
Yeah. Go to our website. We have a contact us. We can set up either a call, Zoom, email, whatever works best.
Perfect. And again, like I understand there's other services, TurboTax, stuff like that. But when we're doing something as complicated as this, I think it's super important for people to understand what they're getting themselves into and also being able to talk through that strategy with you as well. Like, hey, should I be taking this as a long term, more of a FIFO strategy, or should we be doing, the individual, the identifiable, what was that
Yep.
called again?
Specific identification.
Specific identification tax strategy. So, um, yeah, and this
Yeah, a lot of it's
again,
planning too, and everyone's different. So what might be applicable and better for one person is not going to be the same, across the board.
no, and you never, and that's the problem with these other things too, is you don't want a one size fits all approach because you're not going to be maximizing the amount of money that you keep. So cannot recommend this man enough. Again, they've been in business 40 years. Um, trust these people with my life. So go check that out. Again, I'll drop the link. Mark, thank you so much for being here. Thank you for the information. I know that like it's still the Wild West kind of when it comes to crypto. And I see some stuff on Twitter and I don't think people know what they're doing and they're going to get themselves into some bad positions moving forward if
Mhm.
they don't, like you said, kind of have a strategy locked in.
Absolutely. Yeah.
So thanks for being here, brother. Appreciate you.
Thanks for having me.